Good morning, good afternoon, good evening. I'm in Toronto today visiting my parents, and welcome to our 325th weekly webcast. Now, if this is the first time you're joining us, welcome. If you've been with us before, welcome back. So the way this call works is this is an AMA, like you see on Reddit, Ask Me Anything. You can ask me business questions, career questions, investing questions, any questions you want to. And my humble goal is to help you take your career, your portfolio, your happiness, your business, etc., to the next level. So without further ado, let's begin and thank you. Okay. So first question I've got here is from Ray, who wrote any thoughts on the stock Workday WDAY. I invested in the IPO back in the summer 2012. I think it's a great company, but I always want you to do your own research, and I teach you exactly how to right now. So I pride myself, instead of giving my clients, my students a fish, I teach you how to fish you eat for a lifetime. So let me show you how to do investment research on companies. Okay. So what you want to do is you want to do qualitative research, quantitative research, and then financial research. Okay. And this is how I did investment research on companies when I worked in venture capital, as well as when I worked at Goldman Sachs and some of the top hedge funds. Okay. So you start off, and I've got 100 tabs here to do research on companies. You always want to start with the management team. So with a company like Workday, if David Duffield is still involved, then it probably makes sense to continue doing research. He was the founder of the company, and he started a company called PeopleSoft years ago that Oracle bought. It was a poison pill acquisition, or actually, there was no poison pill. He bought Oracle bought PeopleSoft years ago, and it really upset David Duffield. So he put in poison pills with Workday so that his company Workday could not be purchased. And I don't ever recommend investing in any company ever if the founder is no longer running the company or at the company. No exception. And the reason I say that is because if a founder leaves a company, then innovation dies and bureaucracy sets in, because the founder of the company has the total support, unconditional love support of the board, and they can usually do whatever they want, meaning they can think long term. If the founder is not running the company, like it's a CEO who is not a founder, then they're very short term focused in many cases, to the extent that they try to appease or appeal to Wall Street or short term investors. As Warren Buffett said, the longer the view, the wiser the intention. You got to be long term focused when you're a CEO or when you're an investor. In fact, Warren Buffett, whenever he invests in a company, he always tells himself after he buys a stock that he's assuming that the market's going to be closed for 10 years. Don't invest in companies where the founder's not running the company. Okay. All right. Next thing you look at is the products, services they sell, etc. Catalysts or drivers, meaning what makes the stock go up or down. And that will help you a lot when you build your financial model as well. Then after you look at all the qualitative aspects here using consulting frameworks like the Boston Consulting Group Matrix, SWOT framework, etc., then what you're going to do is you're going to transition into analyzing quantitative stuff for the company. So you start with a total addressable market, and you never want to invest in a company that is not in a massive market. In fact, when I used to work in venture capital, and we partnered once with a venture capital firm called Kleiner Perkins, they once said, a partner there, a buddy of mine there, said that they usually don't invest in companies unless the size of the total addressable market is at least $20 billion. And the reason they say that is, in the unlikely event that the company gets 5% share of a $20 billion market, that's $1 billion of revenue per year. Now, when it comes to venture capital firms, the top 10 venture capital firms on the planet, only 1% of their investments are in unicorn companies, meaning companies with a valuation of over $1 billion. And that's why you have to look at the total addressable market closely. The exception to that is Sequoia, where 5% of their investments become unicorn companies. And I partnered with Sequoia before as well. They're great. Then after you do the qualitative and quantitative research on a company, the most important part, and I teach my students this, and you can get this dashboard and many other templates in my programs, just go to my website to learn more. But you want to do financial research, okay? And you want to spend most of your time forecasting revenue Then the income statement is pretty easy because most line items on the income statement are percent of revenue. Then you forecast the balance sheet. The cash flow statement is pretty simple because if I give you the income statement and the balance sheet, the cash flow statement's automatically made. Then you want to value the company using 3 different valuation methodologies. And the reason I say this is because one of your valuation methodologies is going to be way, way off. We usually don't know which one. It's usually DCF. But by taking an average target price on 3 different valuation methodologies, you minimize the margin of error. And when companies go public, the investment bankers and equity capital markets at big firms like Goldman Sachs, Morgan Stanley, et cetera, what they do is they help the sales force on the trading floor to sell these deals, usually using 3 different valuation methodologies. Then you do a sensitivity analysis, auditor analysis. The last step, you look at technical analysis. Wait at the end, please. Now, once you fill all these questions out on a company like Apple, for example, and this is just dummy data here, what you're going to see is you've got a 1-pager here. And it summarizes everything from the spreadsheet. You look at fundamentals first, always when you look to invest in companies. Then you look at valuation, and you're going to value the company based on your earnings estimate in 5 or 10 years. Last thing, if at all, you look at technical analysis. And the great thing about this product here, which again, you get for free if you join my programs, is you can print it out, bring it to your interviews. You'll do incredibly well this way. You can also create a detailed report, and you have a dashboard as well. And as Sun Tzu said in The Art of War, every battle is won before it's been fought. Now, to take your investment analysis game to the next level, what you can also do is you can actually do a forensic financial statement analysis using AI. And this is a new product of mine I just released with a good friend of mine, former investment banker and CPA, Gary Rush, who has 5 decades of experience. I learned so much from him partnering with him on this course. And this will help you analyze any company in terms of analyzing the audit report, income statement, balance sheet, cash flow statement, footnotes, etc. What comes out of this is always a 1-pager and a massive, massive write-up. All right. Let me get back to your questions. Thank you. All right. Next question is, what are your thoughts on the Institute of Trading by Anton Krail? Thank you. I don't know that person, but I say this with love in my heart. Don't trade. Don't be a day trader. Invest for the long term. I promise you, you will lose your shirt. Now, there's a reason why we can't identify the names of successful day traders that have been successful over many years or many decades because they do not exist. You need to be long-term focused. Now, if you're a day trader, it's like walking into a casino. Okay. The house wins always in the long run. And in fact, each month has only 20 weekdays, meaning 20 days the equity markets are open. And stocks go up and down in a short amount of time for stuff you can't forecast, like what Donald Trump or any other political leader may or may not say about tariffs or, I don't know, uncertainty in the Middle East or Ukraine, et cetera, or commodity prices, or one bellwether stock reports earnings, which is great or not great, which drags the market up or down. You cannot do it. It's not sustainable. I promise you. Please don't trade. And if anybody tries to sell you on a program that teaches you how to day trade, run away from that. Just buy. If you don't have time to do investment research using templates like the one I showed you, then just buy ETFs like the S&P 500 and sit on it for 20 years. Now, I'm putting my reputation on the line by saying that I think the S&P 500 is going to be up between 15 and 20% on average yearly for the next 20 years. It could have big down years. I don't know when. I don't really care. I'm long-term focused. But if all you did was you took your retirement savings every year and you threw it into ticker VOO, okay, that's S&P 500, you will have over $1 million in 20 years. I don't know the path, but I know the destination. And for everybody out there that watches the media, and there's a lot of fear mongering out there, don't believe them. They don't know what they're talking about. Don't take tips from them. Tips are for waiters. Just be long-term focused, I promise you. Because the very last company and country on the planet to ever go bankrupt will be the US economy. And the best investment in the US economy, the safest one, I think, is the S&P 500. Now, don't anybody on this call leave your money in cash. Cash is trash. So the United States government, what they've done since COVID, they've increased the supply of money by about 50%, almost 50%. And what that means, if you leave your money in cash, you're actually losing money. And so I teach you how to invest in all major asset classes. What I like much, much better, though, than stocks is real estate, especially your primary residence, because the inherent tax deductions you get. And it's my dream that all of my clients, all of my 2 million students around the world, that within 10 to 15 years, you make more money from your real estate investment properties than you do from your base salary. Okay. And when you invest in real estate, and I've got a course for everything on my website as part of my program, but when you invest in real estate, you want to look at income potential from it. So the ideal investment, I for income, D for depreciation. What this means is, pardon me, if you invest in real estate that's not your primary residence and you rent it out, what that means is you pay less in taxes because of depreciation. Now, I remember back in 2016 when Hillary Clinton and Donald Trump had that debate, and Hillary Clinton said to Trump, "You know, you're not paying taxes. This is not fair. What's up with that?" And he said, he was transparent about it. Is what it is. He said, "Well, of course I don't pay much in taxes because I own real estate and I get to use depreciation." And so very wealthy people own real estate and they pay less in taxes legally. So in terms of ideal, E for equity, A for appreciation, L for leverage. I help you select properties to buy and value the companies using 5 valuation methodologies. I teach you about the mortgage, all the formulas, and what comes out of it is a one-page summary you can print out, and a massive business plan as well. Now, the reason I mention this stuff is that failing to plan is planning to fail. And like, I don't want you guys to ever invest in any major asset class without doing an investment research report first. Just like you wouldn't start a business without writing a business plan first. And I can provide you with business plan templates as well. Again, failing to plan is planning to fail. Okay. All right. Next question I've got here is, as a European, should I limit somehow the exposure to US-based ETFs and stocks? I would, only because you've got US dollar exposure. Okay, so I'd probably limit it to maybe 20 to 30% of your portfolio in US stocks. And the reason I say that is about, between 20 and 25% of the global economy is GDP is United States economy. I think it's closer to 21 or 22% now. But you do have US dollar exposure. I'd be careful there. What you can always do if you guys want to invest in ETFs, and please don't ever invest in mutual funds or a scam. The hidden fees can be as high as 5%. Invest in ETFs because the fees can be less than 0.05%. That's right. And if you want to do investment research on ETFs, what you can always do is you can go to a free website called etfdb.com. That's etfdatabase.com. Okay. And then what you can do here is you can look at ETFs by geography, ETFs by type, like crypto ETFs, AI ETFs, etc. And make sure you look at number 1, liquidity. Number 2, the performance fee, and number 3, the components. Obviously, if you have questions about specific ETFs, I'm happy to go into that in more detail. Next question I've got is, when you measure your exposure, do you add the ETFs to the individual stocks? Do you add part of the S&P 500 to IT? I know what you're getting at. So roughly 30% of the S&P 500 is in technology stocks. I don't really look at it that closely. What I do recommend, though, is that if you buy individual stocks, I don't want more than 20% of your portfolio to be in any one particular sector. Like no more than 20% in tech, no more than 20% of retail, healthcare, financials, commodities, whatever, right? And that's just good diversification. And what I also want you to do if you buy single stocks is, I never want you to have more than 5% of your portfolio in any one particular stock. So that means you have to have a minimum of 20 stocks in your portfolio. ETFs, you can go higher because they're diversified, right? But I don't care if a stock has a cure for cancer. Like I do. Obviously, I want cancer to be destroyed. We're going through it in my family now, but I just don't want you guys to invest more than 5%, please, in any one particular stock. Thanks. Okay. All right, next up, if you want your portfolio to be only in ETFs, how would you distribute it between S&P 500, technology, financials, and healthcare? Aside from the S&P 500, again, I don't want more than 20% of your portfolio to be in any one particular sector. And then you wrote, which 10 companies in financial sector would be worth exploring? What you can always do is use that template I showed you at the beginning of today's call to be able to do your own investment research on those companies. Yeah. And then the next question is there an expense ratio high enough to make you give up on an investment theme? In Europe, we have limited choices on ETFs. Yeah, I would say anything above 50 or 60 basis points, meaning 0.5 or 0.6%. Let me show you how to look at expense ratio, because this is really, really important. Again, if you invest in mutual funds, you can pay 5% or 500 basis points in fees per year, including hidden fees. So what I'm going to do on the planet, when you look at the fees, you'll see here, it says, let me make this slightly bigger for you. It says the expense ratio here is 0.3%. That means for every $100 you invest in this ETF, you're paying 3 pennies in fees per year, which is very low. Now, what I want you to do is always double check this data by reading the investment offering memorandum, meaning the prospectus, okay, for this ETF. Another thing I want you to look at is average daily volume, okay? And make sure that you never, ever, ever, ever buy more than 10% of the average daily volume in a particular ETF or stock, please. Okay. Give me 1 second here. Just doing a check here. Okay, good. We got a nice spike there in traffic. Awesome. Okay. All right. Next question I've got here is, what is your opinion on synthetic replication ETFs? Are they riskier? What if there are no other options for a given theme? Do we give up on the theme? Yes, you give up. And here's why. Whenever you buy exotic ETFs, meaning synthetic replicated ones, quite often there's options included in them. Okay, and so it's very risky, right? And I don't want you guys to invest in levered ETFs either, because there are options there as well. And as Warren Buffett said many years ago, leverage and derivatives are financial weapons of mass destruction. Be careful with that. Yeah. And if you're going to do it, I want you to read the investment offering memorandum cover to cover, please. Yeah. The problem with options, especially if my clients here use options, is that when you write options, meaning when you sell them, not when you buy them, but when you underwrite them, okay, you can lose more money than what you invested. Just be careful, please. Yeah. All right. Next question I've got here is, are you saying that apart from ETFs and bonds, there should be only founder-led companies in our portfolio? In my humble opinion, yes. Okay. Nvidia would not be where it is today if Jensen Huang wasn't still there. Now, I know there are exceptions. I get it. But I've back tested this thoroughly. Okay. There are exceptions to this, but just try, if you can, to invest in founder-led companies. And when I used to work in venture capital, I wrote an article about this. It got a lot of press. Just do a search on venturebeat.com and my name. You'll see more details on that. Yeah, I've done thorough research on this. Yeah. All right. If 20% of your portfolio is $100,000, let's say, is it better to split that 100K into 4 stocks, 25K each, or 10 stocks, 10K each? Neither of those. I would say if you're going to invest, as I mentioned earlier, in single stocks, I don't want your portfolio to have more than 5% in any one particular stock. It's just good risk management. Yeah. And I have to be a good steward of capital. And I have a fiscal duty or financial responsibility to protect my clients, my students. I say it with love in my heart, always. That's why I don't believe in day trading, and I believe in diversification as well. Yeah. What is the strategy with the low risk companies that have to populate a percent of your portfolio? Can you actually substitute them with ETFs and have 40% ETFs and 6% high growth companies? Is it okay if 60% of these companies are small and mid caps? Yeah, let me answer that a different way. So there's 2 types of investments. Okay, there's growth investments, meaning companies that are expensive now but growing quickly. And there's value investments, meaning stocks that are cheap, have good cash flow and higher dividend yields, like value investments, like Warren Buffett. The way to understand what percent of your portfolio should be in growth versus value is as follows. You take 100 minus your age. Okay, so if you're 25 years old, 100 minus 25 is 75. That means that 75% of the companies in your portfolio can be growth based, meaning riskier based after you do your research, and 25% in lower risk or value based stocks if you want, or AAA rated bonds. By contrast, if you're 90 years old, 100 minus 90 is 10. That means 10% of your stocks can be in growth stocks or riskier stocks, and 90% in value or lower risk investment vehicles, like CDs or perhaps value stocks. And the reason I say that is you don't have as much time to make back that money. Now, the problem with that analysis is I really do believe that on this webcast today, there are people watching that will make it to 150. So that 100 minus your age thing is kind of an old school private wealth management methodology. Okay. I'm drinking with a straw because I'm trying to make my teeth a little bit whiter. Yeah. All right. Next question is, you say there is no point in investing in companies with similar ROI to the S&P 500. Yeah. So let me talk about that. So my thesis is, and obviously do your own research, that on average, the S&P 500 will be up between 15 and 20% for the next couple decades. I really believe it. Now, there's going to be big down years. I don't know when, I don't care, because I don't care about the path, I care about the destination. And my thesis is that leveraging AI, you'll be able to cut expenses materially. And a lot of companies are doing that. It drops right to the bottom line. But in a couple of years, companies are going to start using AI to grow revenue as well. Then it's off to the races. Yeah. But if you're going to invest in individual stocks, I want you to do your research, and I want you to invest in what are called 5x5s. What does that mean? That means you think based on your research and the templates I provide you with, that you can make a 500% return within 5 years. Now, that's what I do, but I'm usually wrong, to be intellectually honest. Maybe it's only up a couple 100%. I don't know. But if you do the research yourself and fill out the templates I provide you with, a couple things will happen. You'll sleep at night knowing that you've done your research. Don't listen to anybody, including me, or these idiots on television that tell you what to do. Number two, you won't panic sell at the worst time because you've done the research. And Warren Buffett, I know I've said this before, but it's such a great quote. Warren Buffett famously said, the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. Doesn't make sense, right? We get too emotional about investing. We sell stuff we like when it goes down. Crazy. That's why you got to be unemotional in business and watch your net worth take off that way. Be long-term focused, please. All right. Give me 1 second here. If 70% of my portfolio is in stocks and 30% in ETFs, does it make sense to have 14 stocks or 6 ETFs, or 30 stocks, only 15 ETFs? Is too many bad? Yeah. So statistically, if you have way more than 20 stocks in a portfolio, we talk about the efficiency frontier, which is boring finance theory. But if you have way more than 20 stocks, it's not really going to help to diversify you too much. But the rule that I like to use is at least 5% max position size, and I go over a little bit sometimes to be intellectually honest, and then 20% in each sector. And if you live overseas, be careful of FX exposure, please. What's your opinion on investing in wheat? Now the price is down because of over supply. Yeah, I'm not a huge fan of investing in things where supply is not limited. So I like investing in gold. 5% of my portfolio is usually in ticker GLD. Do your research first, please. And what I like about gold is that it's counter-cyclical, meaning when the economy sucks, gold is going to go up. And also, there's a limited supply. And my grandfather, God bless him, used to always say, Chrissy, buy land, they're not making it anymore. So if you're going to invest in asset classes, do your research and make sure that supply is not going to increase. Yeah. And when you do investment research on companies, if you can't find the driver, but your thesis is that production is going to increase over time and prices as well, then that's a home run of an investment. Just be careful about supply. If supply goes up too much, price goes down. Next question is, can you comment on the liquidity of an ETF ticker TUR? Yeah, absolutely. And I'll show you guys how to be careful about liquidity traps right here. So let me type here ticker TUR, Turkey. That's where Udemy was founded. Yeah. All right. So let me take a look here. All right, where's the average volume? Yeah. So the average volume on this ETF here is 121,000. What that means is you're never allowed, in my humble opinion, you're never allowed to buy more than 10% of the average daily trading volume of a stock or ETF ever. So you can sell it if, God forbid, you need the money. So that means you can't own more than 12,000 shares times whatever the price is here. That's how I look at liquidity. And a lot of hedge funds went belly up in the fall of 2008 because they owned illiquid stocks. And illiquid stocks own you in a down market, not vice versa. Yeah. All right. Next question is, what do you think of SMCI? Yeah, I did a big case study on that actually in a course I just released. You can get access to now on my website or on Udemy actually. And if you want to learn more about that, what you're going to do is you're going to go to the case study over here where I tell you about the audit report issues. And I don't trust the company and the company's accounting because their auditor resigned. Yeah. Okay. Next question is, what do you think of investing in natty gas, natural gas? Can you show and explain support level of NGAS MI? Yeah. So my answer is going to be similar to what I mentioned before about other commodities. You got to look at supply as well. Yeah. And the problem with natural gas and oil longer term is that because of clean tech, especially after the current administration leaves after 3.5 years, I'm not going to make this political, but I think that EV is a great market longer term. And there's a very famous Saudi Aramco executive who once said that the Stone Age did not end because they ran out of stones. Yeah. Yeah. In terms of support levels in general, I'll see if I can do it for you. I really want you guys to focus on fundamentals first, valuation second, technicals just third, but I'll answer your question if I can. So the ticker here is NGAS dot MI. Okay. Natty gas. Yeah. So yeah, this isn't that liquid for me to be able to give you a smart opinion on it, but I'm gonna do my best anyway. So I'm gonna look at year to date. Okay. And what drives the price of natural gas is local drilling. Um, you know, Trump's drill baby drill policy. Also geopolitical events. There is a correlation between natty gas and oil, of course. But I am going to show you this. Okay, so let me go here full screen. All right. And it's kind of hard to see. Let me actually make this a bit bigger here. But when you look at technical analysis, okay, down here we have the relative strength index. And do not use what I'm telling you for natty gas for this, okay? This applies more so to single stocks, okay, longer term, after you do your research on the fundamentals evaluation. But if you see the RSI down here, relative strength index is 20, close to 20, it could be a buying opportunity, right? Like right here, right? So here you buy at 677, and then when it's overbought, you sell. But it doesn't work perfectly all the time, as you can see. That's it. Yeah. And then you can draw a line as well. It looks like there's a downward channel right here. See here, you connect the low points and the high points, and the chart looks like death. Yeah. Doesn't look good. But again, what I want you to do always is focus on fundamentals first, valuation second, and technicals a distant third. Thank you. Next question is, do you have any thoughts on Nestle? How do you form an opinion if they will improve their margins? Yeah. So what you need to do on Nestle is two things. Okay. So the first thing I recommend that you do for any stock actually is fill out this 100-page template I give you. And if you want to learn more about this, just go to my website, harounmba.com, and click set up a call with somebody on my team. You want to do a thorough analysis, especially of the financials, obviously. But what you want to spend more time on is what most people don't do, and this is part of a new course I just released, which is you need to do forensic financial statement analysis. Okay. And I teach you how to do this using AI. And you really have to read through the footnotes as well to understand the footnotes from the income statement, especially cost of goods sold, etc., to find out what the hell is happening with margins and can they improve them longer term. Yeah, hope that makes sense. Okay, give me a second. Okay. All right. All right. Give me 1 second. Yeah, keep typing your questions. Thanks, everyone. All right, Buffett, great to see you, brother. Great to see you. I'm actually in Mississauga right now, visiting my parents. Bavik is one of my students, graduated years ago. He lives in Mississauga. I'll show you exactly where he lives. So I'm in Toronto right now, or Mississauga, right? And I'll show you there. The CN Towers is over there. It's a bit cloudy day. It's tough to see. And Bavik lives in one of those buildings right there. Bavik, it is great to see you, brother. I enjoyed meeting with you when you came to the annual networking event back in 2021. I've got another networking event actually for all my students. It's a 3-day event here in the Bay Area. And if anybody wants to attend that's a client, let me show you exactly how to do it. It's going to be September 27, 2029. Okay. You get one-on-one meetings with me. Network with students from all over the world. And then I take you also to Napa Valley, where I've rented out part of Francis Ford Coppola's vineyard, which would be a lot of fun. Let me show you how to access that because I'd love to see you. All right, so you go to harounmba.com. And then what you're going to do, and I'll paste this in the chat as well, is you go to the in-person graduation here to learn more. You don't have to graduate to attend any of my programs. You can just attend. It's fun. All right. And if you want to come, just fill out the steps down here just so that my team can account for all of you. So I just pasted that there in the chat. Thank you. All right. How about those Blue Jays? All right, Peter. Hey, Peter. Great to see you, buddy. Peter wrote, hey, Chris, how do you see the rise of inflation caused by tariffs impacting the stock market in the next 3 to 6 months? Are we looking at bear times ahead? Yeah. I'm actually a little bit worried about the economy right now. Of course, as you know, from an investment perspective, I'm longer term focused. And don't ever listen to economists when they predict how the market's going to be. There's a famous saying that I'm going to butcher, which is economists have successfully predicted 27 of the past 3 recessions. Things are never as bad as you think. But I see the same economic data that you do. And it leads me to believe that the Federal Reserve is going to cut interest rates this fall, right? The market's starting to price that in as well. I'd be surprised if we didn't get at least a 25 basis point cut. And so, yeah, inflation is a bit of a concern because of tariffs. But my dad taught me when it comes to Trump, and look, in the last election, I didn't vote for either candidate. Okay. I'm more of a libertarian. I vote Republican a bunch of the time, sometimes Democrat, but it all depends who the candidate is. I didn't vote in the last election. Oh my God, I'm talking too much about politics here. But my dad taught me that don't focus on what Trump says, focus on what he does. And it's a negotiation tactic. And I see the same headlines you see. And living in Canada, it's very painful for me here. I feel bad for my people, just given the tariffs. But I think it's a negotiation tactic. I don't think it's going to be as bad as we think. And I do think that several decades from now, people are going to look back at what Trump did and said that it helped the economy. Yeah. Short-term pain. Yeah. All right. What is the safest investment to get a consistent return of 5 to 8% per year? Depends what country you're in. If the country you're in has AAA rated bonds or well above A rated bonds, federal, okay, don't do municipals, okay, because you can lose every penny, but federal bonds. And if rates are between 5 and 8%, that could potentially be it. You can also, if you're in the United States, I'll show you what's the safest. Oh my God, I can't believe I'm going there. Here we go. So you can go to treasurydirect.gov, and I think every American should own these after doing your research. Okay. And the way this works is you said 5 to 8, so I'm a little bit below that. But you can buy 30-year bonds if you want, but I like this one here. Okay. Now this here is the Series I savings bond. And the way this works, and the reason many of you haven't heard of this is because banks are not allowed to sell this. You buy this directly from the Treasury. Okay. And the way it works is you invest and I think it's 10 grand per year. You can do max if you're in the States, and you're getting a 4% return. And if inflation gets worse, then this will go up. Now, the government, what they do is they reset these rates every May 1st and November 1st. Okay, so every 6 months they reset the rates. So if inflation is way, 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 way worse, by November 1st, then this is going to go up a lot. If inflation is way better, this will go down, but you will never lose money on this. You will not lose money on this. Yeah. So anyway, I recommend checking this out. You can always go to the FAQs, go to treasurydirect.gov. I'll paste this in the chat right now for you guys as well. I think it only works if you're in the United States. And I remember a couple of years ago when I told my my clients, my students on this webcast to buy it or check it out at least, it was at 9% when inflation fears were much, much higher. All right. Next up, Andre, how are you? I missed you, brother. Uh, you're from Missouri, right? You're one of my MBA students on my website back in 2019, and I made that real estate course finally. If you want to get access to it, it's in the last section of your curriculum. I miss you, man. Hope you're doing well. You wrote, "Hey Chris, it's been a while. I went into the corporate world. Nice. Got a good job and got promoted within 3 days. Thanks to what I learned in my Haroun Education Ventures MBA. Thanks so much. I'm using it every day now. Thank you. Thank you. God bless you. I appreciate that. Do me a favor. Can you send me an email? I'd love to catch up with you. Email support@harounventures.com because I want to set up a call with you. It's been way too long, man. But I miss you and I hope you're doing well. All right. And thanks so much for introducing me to your cousin, who helped a lot with credit score analysis too. Thank you. Back in 2020. Thanks. All right. Next up, Alex, how are you? Question from Thabo, which is, "Hi, Mr. Haroun. Hope you're doing well." I'm great. Thanks. Hope you're doing well. Is the state that Tesla is in the state that Tesla is in, are you still looking forward to investing in it? And if so, is it because of who runs it or the fundamentals, even though they are declining? Yeah. So to state the obvious, if Elon Musk, who technically is a founder, technically, if he were to leave the company, then it would be a terrible investment. But if he stays, there is still a chance. Do your research, please, using my 100-step framework and try to forecast what you think earnings will be in 5 to 10 years. My biggest concern about Tesla, it's the political stuff of people, that are more left wing not wanting to invest. That's an issue. That'll go away though. My biggest concern with Tesla is BYD. BYD makes more electric vehicles than Tesla does right now. You can get them for about 10 grand. You don't see them in the States because 100% tariffs, but a lot of people are buying them in Mexico now and driving across the border. These BYD vehicles, they're arguably better than Teslas. They're unbelievable, actually, for what you get. Incredible. They can self-park, parallel park by actually the cars like this, the wheels turn and it pulls itself directly in the parking lot. Just do a search on BYD cars. I think that's the biggest threat to Tesla, a longer term, and they're all over Europe now as well. Yeah. Okay. Alexandra wrote, "I think big day traders don't exist because liquidity problems they may face after a certain period of time." Yeah. Yeah. It's kind of like smaller hedge funds can outperform bigger hedge funds too, because they can invest in smaller asset classes, meaning stocks that have less volume. But if you're a massive hedge fund or massive venture capital firm, it's so hard to invest in companies that aren't very liquid because it's hard to turn a big ship around. Yeah, if that makes sense. All right, Chibike, how are you? You wrote, "Your voice sounds down, sad today. I hope all is well." I'm a sad clown. Yeah. I don't know why. Maybe I didn't get as much sleep. It could be the echo here as well. Maybe I'm just getting older. The older I get, the better I was. Yeah. But I feel great. Thanks. All right. All right. Next question is from Tommy John. Tommy J wrote, what does free cash flow mean and how is it calculated? Yeah. So free cash flow is basically this. Okay. So think of an income statement. Okay. And an income statement, net income, you think it means cash in your pocket. It doesn't, because there's so many non-cash crap in the income statement, like depreciation, etc. So free cash flow means how much cash you can actually get out of the company each year. And it's calculated by, first of all, analyzing the income statement, balance sheet, and cash flow statement. And the formula is cash flow from operations minus capex. So cash flow from operations is the top part of the cash flow statement. Capex you can get for the most part from the balance sheet as well as from the footnotes. So I hope that makes sense. Okay. And I can show you a model on it as well if you'd like me to. Yeah. Okay. Give me 1 second here. Alexandra, what are your views on derivative trading? Yeah, I'm not a fan. You know, as I mentioned earlier, Warren Buffett said derivatives are weapons of mass financial destruction. Yeah, I'm not a fan. The only reason I like derivatives, and I teach all about options, the only reason I like, so let me explain derivatives first. Okay, so derivatives is a massive market. It's 6 times bigger than the global stock market. And derivatives, and this is the only time in your life when calculus is going to become helpful for you, this one statement, derivatives means the rate of change, right? Kind of like the derivative in calculus. And under the derivatives umbrella, you've got options, futures, swaps, other exotic stuff, forwards, etc. And most people, when they think of derivatives, they think of options. Now, I don't mind buying call or put options in order to put insurance on your portfolio. And think of it this way. Let me explain what an option is from an insurance perspective. So for me, I have a life insurance policy. Okay, and my wife and I, we pay this much every month. If I don't die, we lose this. Hi there. If I do die, my wife is so happy. I mean, my wife gets a lot of money. So that's kind of like a put. Okay, so a put, which is an option, is you pay this much money, hi there, for a certain stock that you own. If the stock goes down, you make money. Stock goes up, you lose this. It's insurance. Now, if you do a lot of research on a company and you see 500% upside within 3 years, you can buy a call that expires in 3 years called a leap. The problem with underwriting, meaning selling these things or trading these things, which is deadly, don't do it, is you can lose way, way, way more money than what you invested. A lot of people don't understand that if you get randomly assigned. Okay, and a lot of very sophisticated people that work at large hedge funds with tons of brains on a stick, meaning smart PhDs, they analyze the crap out of retail trading and they destroy us. They make a fortune from our mistakes. So stay away, please. Thanks. Next question is Matan. Hey, Matan, how are you? Matan used to be in one of my MBA programs a while ago. Yeah, and I think you asked for a refund, but it's great to see you. You wrote, which we gave, of course. I like how you provide practical knowledge. These rules of thumb are super helpful. Thank you. It's good to see you again. Thanks. All right. Next up, and I like your icon of Curious George. Yeah, my mom used to read that to me when I was younger. Yeah. All right. And my mom is recovering well, which is one of the reasons I'm here in Canada. Thank you, everybody, for your prayers. Everything's good. Thank you. Okay. All right. Burry wrote, can you tell us something about gold? I'm a newbie in finance. Help me. Absolutely. Absolutely. So don't buy gold bars, okay? Because a lot of the times they're fake or watered down. Okay. So in 2004, there was an ETF created called the GLD. That's a ticker. And that's the best way to buy gold. Now, the fees are kind of high, around 50 basis points. But the great thing about it is you know it's gold, it's real gold, and you can sell it whenever you want, right? It's liquid. So let me show you. So if we go over here, let's go here to finance.yahoo.com. And this is my biggest position in the fall of 2008 when I was massively short the markets. We were within 24 hours, bank machine's not working. So this here is the ticker. Oh, the expense ratio is less now at 40 basis points. Oh, that's right, because of price volatility. Yeah. So if you want to invest in gold, I recommend buying this. Okay, do your research first, et cetera. But the good thing about gold is that it's kind of like a fear asset, to the extent that if people are worried that, oh my God, the world's going to end, which it never will, people buy gold. Also, there are many economies like India, one of my favorite economies on the planet, largest democracy. I love it. largest populated country as well, growing like a weed. Gold is used a lot there as well. So if you're bullish on India longer term, you got to be bullish on gold. Yeah. So it all comes down to supply and demand, though, right? Demand continues to rise, supply goes down. Home run investment in the long run. I hope that makes sense. Okay. Return on investment, how do you calculate that? Yeah. So what that means is the amount of money you invested and your profits on the numerator, return on. Yeah, let me actually show it to you in a spreadsheet. This might be better. Give me 1 second. All right, I'm going to go over here. Hold on a second here. I'll go here to 100 step here. Okay. I actually can't remember where I put it here. But if you want, what you can do is today at 10 a.m. Pacific time, join my 3-hour Zoom call, and I'll get my spreadsheet that has all of the formulas, which will help you. Yeah. All right. What are your thoughts on the Figma IPO? So if you want to research an IPO, always go to sec.gov, type in the ticker for Figma, and read the S1, and then fill out that 100-step dashboard, please. Yeah, thanks. I remember Adobe tried to buy, and there's like a $400 million poison pill. Yeah. All right, Maxon, first time seeing you on the call. Welcome. I hope you join us again. Wrote, hey, Chris, in the last session, per your instructions, I mailed the support email. I didn't receive any response. Not that I was expecting any one conversation, although you mentioned it. Okay. Tell it. So, Maxon, what I'll do is I believe in full disclosure. So I'm going to search my system right now. Give me 1 second. I'll show you behind the scenes how we operate stuff here. Okay, hold on. And I will show you guys why that wasn't answered if we got it. So here is how I run my business. We use Google, of course. I'm going to search on your name here. Okay. So July 24th, you wrote, respected sir. Okay. And then see, invest in the stock market. Yeah, we get, I can't, this is the type of email we can't respond to. We get, I have 2 million students in every country. So what I recommend that you do instead is, and I don't remember saying email us to ask questions about this stuff. What you can do is this. Why don't you do this, okay? Go to Haroun MBA, and then at the very bottom here, okay, and I think I'm covering it up, but at the very bottom of the screen, if you'll see book a meeting, I want you to click on that to set up a call with somebody in my team will help you. And if anybody's interested in joining my program or asking about my program, please click that link as well. Okay. Now, in terms of what we have to offer, I'll make this quick. So there's 3 main programs we have. We have a business academy, a finance boot camp, and AI boot camp as well. So you can go there, learn.harounventures.com to learn more. Thanks. And what I'll do is I'll put that in the chat if you guys want to learn more as well. I do have to run a business. Okay, let me go over here and I'll go back to Big Chris mode. Okay. All right. Next question. Alexandra wrote, can you just exchange stocks for real estate with another person without paying taxes? It depends if they're in a trust. And it also depends if there's a charitable trust included as part of that exchange. This gets very complicated. I want you to talk to a CPA about this because that's way over my head, to be intellectually honest. I also want everybody in this call, please. I'm getting down my knees now. I want you all to have an accountant. Okay. Filing your own taxes is like doing surgery on yourself. The tax code changes all the time. You will get more money back in the long run and you'll stay out of trouble this way. So I would recommend doing that. Thanks. All right. Matan wrote, yields on real estate have not been great. So what can one do? What sort of real estate assets do you think maximize yield potential? Yeah. Well, you got to also incorporate the tax deduction. Okay. So if it's an investment property, you're going to pay less in taxes because you can deduct the interest, an unlimited amount. That's right. You can also deduct depreciation. Okay. And it all depends on location, obviously, but you want to make sure that the rent you're charging covers your mortgage, right? So it might not be an amazing annual yield, but you get the appreciation big time in the long run. That much I promise you. Yeah. Okay. Next up, Uli wrote, what do you think about competing in a CFA IRC competition? I'm the only non-finance econ student applying for the school team. I don't know what that is. Sorry. I know CFA is a wonderful designation. It's better than an MBA. Stands for the Certified Financial Analyst designation. Takes you 3 years to do. Yeah. Okay. Alexander wrote, do you still have Bitcoins? A lot. Yeah. Yeah. So I set up a Bitcoin IRA back, I think it was in 2013. Put a lot in there as well. I'm incredibly bullish. I think that Bitcoin one day, do your own research, please, is going to hit. It's going to hit $1 million. I don't know when. Don't. You can always buy it lower, though. I promise you. Separately, I want to ask you guys a question, and I want you all to respond if you can, please. There's a company that approached me called btcc.com, and they want to sponsor, my videos and all that stuff. And if they sponsor me, I'll be able to build a lot more schools in Africa. My goal is to build 1,000 of them. But I want to make sure I ask your permission first. So what I want you to do is this. I never take sponsors. I want you guys to go to btcc.com and give me your thoughts. Okay. It's the oldest exchange in the world. And usually the link works. There we go. Great. Oh, because it went to English. Yeah. So it's the oldest exchange in the world. I want you guys to take a look at it, or one of the oldest. It's been around since 2011. I want your feedback, please, because I'm not going to take them as a sponsor without doing more due diligence and without getting your permission. Yeah. And I've got another call with them tomorrow. Yeah. But I won't do it if you guys say no, or if you have negative feedback, whatever it is. Thanks. Okay, but based on my research, they seem okay so far. But you guys tell me you're the customer. All right, give me 1 second here. All right, next up, Maxon wrote, from your recent conversation, can I conclude that you're a gamer too? If so, what games you played in the past are currently playing now? Oh, hell yeah. In fact, when GTA 6 comes out next May, if it ever comes out at all, you're not going to see me for a month, okay, kids? Like, I'm a 53-year-old man child. I'm going to be nerding out day and night playing that game. The second video I saw, the second trailer for it looks amazing. In terms of what am I playing right now, so I play Royal Kingdom on my iPhone every single day. Also, I got a Switch 2 for my kids. And we started playing this Donkey Kong Bonanza game, but I'm now playing it by myself. It is a masterpiece. If you like Mario Odyssey, 53-year-old man child, I don't care. Yeah. Yeah. All right. But my favorite games are Uncharted, as well as The Last of Us, anything Naughty Dog makes. Yeah. Okay. And Red Dead Redemption, of course, part 2. Brilliant. Loved it. Okay. Manas, how are you? Manas from Calcutta. Manas wrote, good morning, my dear mentor. What a wonderful week in Canada. I know from background, looks old school heritage. Let's go. Yes, this is my, people ask me, what's your background, Chris? And I say, well, it's here. No, no, I do get that question. So my dad is Egyptian. He immigrated from Egypt to Canada in 1967, and my mom is half Lebanese, and the other half is Scottish Irish. I've green eyes. Thank you, Grandma. It sucks though, because that's why I have a blue screen behind me in my studio, because I can't do green screen. You see right through me. Like, you guys should be able to see right through me, because those who can't do teach, and those who can't teach gym class. I'm just kidding. But not about the gym class thing. You know that's true. Yeah. All right. What's the point of scaring your best friend India? Okay, you're talking about Trump, right, with India. What's the point of scaring your best friend India with dumb tariff? Will it be bad move for the US to beat down India and Canada and Brazil with such high tariffs? What's the point? Yeah, it's a negotiation tactic, right? I'm not saying it's right or wrong. I don't like the way it's being done. I'd be more gentle about it. But the way that Trump negotiates is this. So when people negotiate, and I've said this before, usually one party says, I want this, other party says, I want this. They meet here. With Trump, it's different. One party says this, Trump says this, they meet here. So as I said earlier, don't focus on what Trump says, focus on what he does and what he sticks to. Yeah. Okay. But I wish there weren't tariffs, especially up here in Canada, man. We're hurting up here. And then you wrote, I want to humbly argue with you on your 5% position, 20 positions. Why can't I have 10 positions with 10 stocks only, safe, still exposed? What if I love these 10 stocks, assuming all growth? Your thoughts? Yeah, chacun son goût, to each their own. Just make sure you do thorough research. And you're in my MBA program, so I want you to go EMS 4-2. That's Economics Management and Strategy Semester 4 Class 2. And download that 100-page template I showed everybody earlier. And do write-ups on all 10 of those companies. Okay, Malcolm wrote, I'm selling my mutual fund soon. Good. And then shifting into low-cost ETFs. Yeah, mutual funds are absolute scam, man. It's ridiculous. So why do they still exist? Because they pay a fortune to lobbyists in DC, and also they spend a fortune on, feel-good ads you'll see from Fidelity, Putnam Wellington, whatever it is. Their fees can be as high as 5% versus 0.03% for ETFs. It's a scam. They also underperform ETFs as well. Don't buy mutual funds. Yeah, good. All right. So you wrote, I'm selling my mutual funds soon buying ETFs instead. Alongside this ETF, I'm thinking of buying preferred shares in energy stock. Why do you recommend preferred shares over common? So first of all, you got to do the fundamental research, evaluation-based research on a company before you consider investing, period. But the way it works is preferred shareholders get preference if the company goes belly up. They also get preference in terms of being paid a dividend first. Now, if a company goes belly up, the people that get their money back first, the people with a senior claim in their assets, are the bondholders. Okay. Then the preferred shareholders. They think of the word preferred, preferential treatment. Then the lowest of the low, hey there, is common shareholders, right? They're commoners. They get their money back last. Yeah. Especially if it's a private company, if you can choose between preferred and common, I'd usually prefer preferred over common. You don't get diluted as much. Do your research first, though. Yeah, thanks. Okay, but most times you buy stocks in the markets, it's just common. Like liquid stocks, it's just common. We don't have a choice. Yeah, for the most part. Okay. Manas wrote, well, we have our class after this call this week. Yeah, I've got my 3-hour and 20-minute Zoom call starting after this ends. So the way it works, if you guys want to join my program, you can always just go to the link below to learn more. But the way it works is in my programs, and I love doing this, I have so much fun. You get daily Zoom access to me. Okay, so every Monday, Tuesday, Wednesday, Thursday, Friday, at least 1 hour. So that's 7 hours per week of very small group Zoom meetings. You can also get 10 hours of one-on-one time with me and 500 hours of my humbly award-winning content, a lot of which is only available on my website as well. You get that for life as well. Yeah, but if you want to learn more, go to learn.harounventures.com and set up a call with somebody on my staff. Thank you. Okay. And Manas wrote, if you had $1 billion, which you have, no, I don't. And if I did, it would all be in my schools I'm building. But I'm going to die broke. Yeah. If you had $1 billion and had just one place to put it in, all of it, where would you put it? Ethereum or Bitcoin? Please pick one. Okay. Well, Bitcoin. Yeah. The reason is, so the problem with Ethereum, and I do own Ethereum, and I disclosed that for years. The problem with Ethereum is there's no limit on supply. When it comes to Bitcoin, there's a limit on supply. There's never going to be more than 21 million Bitcoin by the year 2140. Right. And that's one thing I can never get my hands wrapped around with Ethereum. I love it because it's a platform and a lot of ICOs and NFTs are minted or created or birthed off the Ethereum platform. But there's no limit on supply, and that does bother me. Yeah. Okay. Next up, Matej wrote, can you please explain in simple terms how investing in bond ETFs works? What happens with the price of the ETF when a bond reaches maturity or pays interest? Yeah, so it's a very diversified portfolio. Okay, what you can always do is go to the prospectus So whatever the bond fund is, just do a search on prospectus. And then they'll tell you what the holdings are in that very long prospectus, written by lawyers, financial executives, etc. That will explain it in a lot of detail. Okay. But it's kind of like how, I don't know, if you buy an ETF, it's got a lot of high dividend yielding stocks. When the dividend comes out, that might get reinvested or be given out as cash, but it's all explained directly inside that prospectus. Okay, assuming there are coupons. Yeah, but you have, and think of coupons and dividends as kind of being the same thing. You got to read the prospectus. Yeah, yeah. But if a certain bond matures, right, at par value matures, I'm sure they'll roll it over, invest in the same type of bond that matures years from now. Yeah, but read the prospectus. It's the only way. Okay. All right, give me 1 second, guys, please. All right. Manas wrote, Nvidia keeps going up, maybe $5 trillion soon. Who knows? It's at 4.4. You're asking about a bubble. Yeah. So what's happened? The recent catalyst you couldn't forecast was the Trump tariffs on chips in China. That's it. That's what's helped, and also great earnings, obviously. Yeah. Also, there's a dearth of investable stocks when it comes to AI, which is why Palantir, which I invested in when I worked in venture capital, why Palantir has a nosebleed current valuation, because there's just not that many you can invest in. Yeah. Okay. All right. Hey, Nintendo. Good to see you. Manas wrote, Buffett has been wrong a lot recently. A lot of returns have been under 7%. Do you think he's lost his edge sitting on a third of a trillion in cash and T-bills? What are your thoughts? Yeah, I haven't looked at his portfolio recently. I do love his investment methodology longer term, but as you know, he is retiring. Yeah. And I would not invest in Berkshire. I just don't feel comfortable because the founder is leaving. Yeah. All right, next up, Wilson. Wilson wrote, I got an interview at the biggest bank in my country for management development program, but they asked for other interested position. So what position is interesting if you want to dwell deeper on stocks? Yeah, so most large financial services companies, especially if it's the biggest one in your country, they have an asset management division. Okay, so for example, Goldman Sachs, Morgan Stanley, those are top two investment banks in the United States. They have management divisions called Goldman Sachs Asset Management and Morgan Stanley Asset Management, et cetera. So you can tell them you're interested in the asset management side as well. Yeah. I hope that answers your question. If it doesn't, let me know, please. Thanks. If compound interest does not account for inflation, then how will we preserve wealth and money longer term? Well, if you invest in companies in your portfolio, you think, based on your research, can produce 15% returns per year. And if inflation is 3% per year, you're still making 12% per year. Yeah. So the key is obviously to create a diversified portfolio that will return much, much higher average return annually than the rate of inflation. Yeah. Or invest in regions of the world or asset classes that are inflation proof. Yeah. But if you're diversified, that won't be an issue. Next question is, if you were in your 20s, what would be the best place to work if you had to start a hedge fund long term, but start as junior investment bank in Canada or London? Yeah. Yeah. So investment banking and hedge funds are different. Yeah. So an investment bank is a firm like Goldman Sachs, Morgan Stanley. They have a lot of departments, including investment banking, equities, private wealth management, et cetera. Hedge funds is where you buy stocks and bet against them, meaning short stocks as well. If I had to choose a hedge fund to start at, definitely Citadel. And I worked at Citadel as well. It's a great company. Yeah. Okay. And in terms of investment bank, to work at Goldman, I spent 5 years at Goldman as well. Yeah. Then he wrote, BYD is so cool and so cheap in valuation. And yeah, Buffett started to sell it. Yeah. And also in volume, they make money in selling $10,000 cars. Crazy. The founder lost his parents very young and was raised by older siblings. Tough guy. I didn't know that. Yeah, sad. And he wrote, "Is this Tim Hortons?" No, it's some other coffee. Tim Hortons is proudly Canadian, and Tim Hortons has like 70% share in Canada. That's huge. In America, I think Starbucks, or $4 as I call it, it's ripoff, has like 40% share. Yeah, yeah, we're very proud up here in Canada of our Tim Hortons, who used to be a hockey player. Yeah, like everybody in Canada. Next question is, what's the point of analyzing a balance sheet? I mean, predicting for 5 years. How does that matter? Why not just go for the income statement, cash flow statement? Thank you. Yeah. So the cash flow statement is created automatically based on looking at the income statement and the balance sheet. Okay. And it tells you why cash increased. You have to understand why cash is going to increase. And if you look at this year's balance sheet versus the previous one, you look at assets and then you look at current assets cash, and you'll see that cash went up. But you don't know why it went up unless you analyze the cash flow statement. Yeah. But you really do have to look at the balance sheet closely, especially the footnotes. Okay, so in the 10K, the annual report, and this is part of that new forensic accounting class I just released, which you get access to for free in the program. But by law, in the footnotes, you have to disclose, how much debt is coming due in the next 5 years and thereafter. You have to look at that. Yeah. Okay, Manas wrote, what do you think about buy now, pay later? Yeah, BNPL. Do you think it's addictive and forces young people to spend more than they own and earn? I'm scared of it. What are your thoughts? Yeah, yeah. I say within reason, it's fine. Like it's for education. Education is an investment, not an expense. I don't mind that at all. Yeah. We don't have BNPL with my product, but we do Klarna as well. Yeah. What I do really disagree with is online gambling. Like I can't believe governments are allowing this to happen. It is so irresponsible. Yeah. I also don't believe that marijuana should be legal because it leads to other things. Medicinal, fine. But what is happening in this world? Yeah. All right. And Andrew, yes, Missouri. Thanks for making the real estate course. You're most welcome. Wish we could have done that together. Yeah, I know, but I was too busy hustling then. I took a job so I could have freedom to work in a nonprofit venture. Nicely done. Nicely done. I'm looking forward to catching up on our Zoom calls. Well, yeah. All right. Next up, Alexander wrote, if you buy long-term gold futures contracts, is it a good gold investment? I mean, looking a couple years out is fine, but I don't think in terms of a couple years. I think in terms of decades. Decades. Like, as I mentioned, when Warren Buffett buys a stock, he always tells himself after he buys a stock, he's assuming the market's going to be closed for at least 10 years. That's how long-term focus I want you all to think. You'll sleep better at night too, and you won't sell at the worst time. Yeah. All right. Next up, Manas wrote, I read a lot of analysts are dead wrong about predictions. That's right, they are, just like the media. And analysis from big banks. Do you think they're wrong and even small guys like us can beat them spot on, or do they have an edge? No, they don't have an edge. Everything that these investment banks have access to, we have access to as well. Okay, so right here, this is how they do their research. They look at investor relations investor relations website for the underlying company. They look at sec.gov, and by law, everything that is filed in sec.gov, we get access to at the exact same time they do as well. In fact, if all you did was you use this spreadsheet here to analyze stocks, I think you run circles around those people. And the problem also with a lot of analysts that work in investment banks is there's a bias. Let me give you an example. So years ago, Morgan Stanley's lead software analyst quit to go to Catalyst, good buddy of mine, Adam Holt. And Catalyst is an investment bank out here in the Bay Area. And then Morgan Stanley called me and said, do you want this job? Right? And I was like, no, but thank you. And I said, but I have a lot of buddies I can call that work at smaller investment banks that probably want the job. So I called a great buddy of mine that worked at a smaller investment bank, right, as a sell side analyst. And I said, hey, dude, you want me to put in a good word? I think you can get this job at Morgan Stanley. You can make like 7 figures a year and all that stuff, whatever. And he said they won't hire me. And I said, well, of course they would. Your money. I love you. He said, no, they won't hire me because I once had a sell rating on Microsoft. You'll notice that a lot of investment banks have sell side analysts. They don't have sell ratings on companies that make big acquisitions. Why? Because if they did, then those big companies that make big acquisitions wouldn't hire them. So there's an ethical wall, I know, that separates investment banking and equity research or whatever it is, trading floors, but it doesn't really exist. Yeah. That's one of the reasons these analysts are dead wrong. Yeah. And that's why for a lot of them, a hold rating means sell. Yeah. Yeah. And also, what happens is this. So companies provide guidance. Okay. What they do is they tell you next quarter, we expect revenue to be between 1 billion and 1.1 billion, and earnings to be between $1 and $1.20. The analysts, almost always, a lot of them, will forecast their models within that guided range for revenue and earnings. Even though, if you do the research, you find out the company always beats the high end of that of guidance. And the reason they do that is so they don't piss off management. Like companies, publicly traded companies will call these analysts and say, hey, what are you doing, man? Our guidance is between here and here. Why go up here? So there's a bias. It's ridiculous. Don't listen to analysts. Don't listen to the media. Do your own research. Okay. And that's what I'm here for, is to provide you all the tools so that you, not me, you can do your own research. Yeah. All right. And if you guys want more detail on that, just go to my YouTube channel and look at one of the latest videos I published called Wall Street Pro Reacts to the movie Too Big to Fail. And I'll show you how Jim Cramer and a bunch of these other media personalities walked retail investors off a cliff in 2008. Always do your own research. Yeah. Nobody's smarter than you. Okay, next up, hey, Ken. Ken wrote, hi, I'm really new to the world of finance. Welcome, great to see you. So it may be a silly question. No. There's no silly questions, only stupid answers. Yeah. If something holds value really well, does that mean it also does not go up in value and decrease in value? No, I think what that means, generally speaking, is that it all depends, right? So let's say that you're buying, I don't know, a car that holds value. Well, all cars are going to go down in value, right? But relatively speaking, that will go down a little bit less, right? Um, I've never heard somebody refer to a stock that holds value well, but I would assume that means a stock that doesn't go down. That's what I would say. Yeah. Yeah. Or it depends on the asset class. Like if you buy a Rolex, Rolexes hold value well to the extent that what you paid for it, it goes up in value over time. But whenever you look at an asset class like a watch or whatever it is, you got to look at supply and demand. Make sure demand obviously is growing much faster than supply, which is what's happening with Rolex, which is run by brilliant people in Switzerland. Yeah. Okay. Manos wrote, talking about Figma, it lost almost half the market cap of Adobe. Is Adobe going to be like IBM soon enough? New players coming up and taking a ton of valuation here. What do you think Figma has a market cap? It's almost 70 billion. Yeah. I'll let you do the research based on that 100-step template. Yeah. Okay. But you also got to do this before you invest in a company or a sector. You always got to ask yourself this. In 5 years, like take a step back, in 5 years, is this company going to be more relevant or less relevant than it is today? And that will stop you from getting seduced into buying value traps, meaning stocks that are cheap for a reason. Just be long-term focused. Yeah. I believe in Adobe's products big time in 5 years. I use them. I love them. Yeah. Although I will say, I hope that AI takes share away from them. And I've started using Sora a lot more actually to generate my own videos for just for B-roll, etc., instead of getting ripped off by Adobe or Adobe, that stuff. Yeah. All right, Jason, thank you so much for that, man. Jason donated $40. God bless you. I'm going to show you where that will go. Okay, so what I do is I build schools. Okay, and I'm going to die broke. I don't really care about money for myself. But I'm currently building a school in Kenya with my students here. Um, and we finished one in Rwanda a couple of years ago as well. So my goal is to build a thousand of these things. And I paid for pretty much all of it. Well, you paid for it, all of you. Thank you. IBM and Microsoft did donate. They donated the computers, the laptops and software as well. So God bless you. Thank you so much for that. I do not have a charity registered in my name. I don't get any of those benefits. I never will. Yeah. So thank you for that. God bless you, Jason. So Jason wrote, Jason from Montreal, bonjour. Je veux faire la classe matinée ce matin. I love Montreal. I lived there for 4 years. I went to McGill from I think it was 90 to 94, where I learned how to drink. I enjoyed every second, no regrets. But you wrote, yeah, the $40 is a little something to help with building schools. Thank you. God bless you. As a Canadian, I invest in the VU through my RRSP. An RRSP, for those in the States, it's like your 401k, but in Canada. But then I buy the Canadian version VFV um, uh, through my TSFA. What are your thoughts on my strategy? Yeah, I mean both of those TFSA and RSP are tax are protected tax based. So I can't really I don't really know if I can say anything intelligent about it except for a great job in putting these in tax free vehicles or tax deferred vehicles for now. Yeah. I wish I could help you more, especially because you donated money. I feel so bad. Um, Let me see if I can actually quickly look up ticker F or VFV. Okay, hold on a second. Let's go here to finance.yahoo.com. Okay, VFV. Okay. And I would tease my German friends pronouncing that. Please don't cancel me. I don't give a fuck if you do. Okay, here we go. Yeah, so this data here is wrong. It says an expense ratio of 0. So what you need to do is you're going to have to go and read the prospectus for this. So investment prospectus for this here. Here we go. And let's see what the fees are here. And this is a typo. This should say about this fund. Sorry. I can tease us because we're both Canadian, eh? Yeah. All right, let me see what the fees are here. And you always got to question the data that you see on Yahoo Finance. Fun facts, total returns, net of fees. We don't care about that because this is S&P 500. Where's the fee? Should be here. Performance fee. You know what I would do is this. Okay, read through all this to see if you can find anything about the performance fee. And then what I want you to do is this. I want you to call Vanguard, okay? And I want you to ask them, what is the fee? And the reason we're doing this is because it said 0% on Yahoo Finance, right? And you always got to double check the data. Yeah. Yeah, so call the company here. Maybe fact sheet, it could be here. All right, hold on a second. Oh, here it is here. I found it. Okay, good. Yeah, I got it. Okay. So it's 9 basis points, which is higher than the 3 basis points for the other one we looked at, VOO, management fee here. So what this means is it's higher fees, but it might be worth paying the higher fees if this is the only way that you can put this in your TSFA. That's what I would say. And that rhymed. Yeah. So I hope that's helpful. But the bottom line is you always want to read the investment offering memorandums for any ETF company. Okay. Or for any investment period, even for like private investments. Like, don't ever invest in a private company without first reading the investment offering memorandum. And if they don't have one, don't invest. And if a buddy of yours says, hey, do you want to invest in my company? I want you to tell yourself quietly, why am I so lucky to be given this opportunity? It's probably because nobody else will. Don't do it. Yeah. Thank you, Jason, for the donation. God bless you. I appreciate it. But I am a fan of what you own, because I really do believe that the best investment you can make if you don't have time to do investment research is the S&P 500. Yeah. It won't be up every year, but who cares? Because we're in this for the long run. Yeah. Nicely done. And thank you again for that. God bless you. All right, next up, Excel wrote, how did you create these impressive Excel templates, the menu, the icons? Do you recommend derivatives such as options, futures, or should they be avoided? Thank you. So I would avoid options and futures unless you want to buy puts to protect your capital, or you buy leaps, meaning long dated calls, after you do a lot of investment research. Speaking of Excel, hell, I've been using Excel since the 80s. I love it. And I'm going to take a quick break, but here's a video I want to show you. It's my Excel promotional trailer. Don't go anywhere. I actually rented a couple of Hollywood studios to do this, where American Sniper is made up. I'll be right back. Thanks. I don't know how to say it, so I'm just going to say it. I'm teaching a comprehensive Udemy course on Microsoft Excel. But let me tell you, Excel is a magician's hat that pulls out solutions to problems you never thought possible. As a former beta tester wizard for Microsoft, I've created more spreadsheets than stars in the sky. Come with me on a journey that will blow your mind. We're going back to a time when accounting was done with, well, sand. This is 5,000 years ago when the ancient Mesopotamians ruled the world, and clay tablets were the ultimate tech. They invented writing and spreadsheets before spreadsheets even existed, with wedge-shaped writing called cuneiform pressed into clay tablets. They tracked their trades, taxes, and loans like it was nobody's business. Ah! I think I'll add new shoes to the miscellaneous expenses column. And then came the paper ledger, the smartphone of the Middle Ages. The first tech revolution that changed the game for accountants and merchants everywhere. It allowed them to record several hundred financial transactions per day, a step up from clay tablets. And just when it seemed like spreadsheets had hit their limits, a new technology emerged. Computers with raw power at your fingertips. Programs like VisiCalc and Lotus 123 allowed for thousands of calculations per day. But with great power comes great responsibility. The undo function was yet to be invented. And today, Excel can do billions of calculations per day. So next time you open up the app, remember the journey it took to get here. And who knows where we'll go from here. Join me and unlock your full potential to wield thousands of years of history like a true wizard. All right, thank you for letting me take a break. Just caught up with my my nephew. He's playing my Switch 2. Okay. Next up, Maxon wrote, was not expecting you to live stream my mail. I'm fully transparent. Always thank you for the instructions. I will try to book, and if in my budget, I'll enroll for the course. Thank you. If you want, we got a 14-day, 100% money back guarantee as well. If we get emails like support questions that are questions, we can help. But given the fact I've got 2 million paying students in every country, it's hard for us to keep up. Thanks. All right. Hmm. All right. Next up, Indranil, great to see you. First time seeing you on the call. Hope you join us again. Who wrote, love from India, more love from Canada today. Your breakdowns of the movie Big Short was amazing. Thank you. Big Short movie made me realize that there is an infinite money glitch. That's true. That's right. Yeah, that's the kill screen. Yeah. Yeah. And so there's three great movies about 2008 financial crisis that I want everybody to watch. You can watch my review videos on my YouTube channel. You can learn a lot about finance too. Okay. One of them is Big Short, which is a 2008 crisis from the perspective of a hedge fund. Then there's Margin Call, which is a 2008 crisis from the perspective of an investment bank, meaning Lehman Brothers. And then there's Too Big to Fail, which is from the perspective of the government, which is a great movie. And so the review video I did, I published I think a week or two ago on Too Big to Fail. It's over 40 minutes, and I teach you 22 finance lessons in it as well. Check it out my YouTube channel if you want. My CMO also tells me, and I don't do this enough, please click subscribe, like, and all that stuff if you want. Or unsubscribe. I don't care. She didn't hear that. Yeah. Okay. All right, next up, Matt wrote, hey, Chris, as we see the growth of AI and potential growth of homeschooling, would you ever consider partnering with a company to bring quality finance education to the public via AI? Yeah, I mean, I have like the who's who of AI companies reach out to me, and we've done some beta tests and stuff of me teaching, but it's not really me. So we have experimented with it, but absolutely, absolutely, um, absolutely, yeah, yeah. Also relating to the potential decline in available public school, absolutely. So I really do believe, like the reason I do what I do, the reason I retired from Wall Street or finance world about a decade ago, is I really want. It wasn't about money. It was about providing quality education at affordable rates for everybody. And that's why I spend so much money on charitable stuff in Africa and tons of scholarships you guys don't know about as well. And Nelson Mandela once said that education is the most powerful weapon that we can use to change the world. I really believe it. And Malala, it's a little bit hot here. Forgot how hot Canada gets in the summer. But Malala once said that with guns you can kill terrorists, but with education you can kill terrorism. And I really believe it. I believe that we can solve every problem in the world with education. I really do believe that. And COVID really showed us that as well. Everybody was bored in the house board. And I actually gave away all my courses for free during COVID. Everyone else was profiting. I was like, fuck that. I want to give away for free. And I remember there's the VP of engineering at Udemy, one of the platforms I teach on, called me at home during COVID and said, "What did you just do?" I was like, "What do you mean?" He's like, "Well, you almost broke our servers. We have hundreds of thousands of people signing up for your courses around the world now, including 100,000 in Egypt." And I said, "Good, it's free. I want people to stay at home." Especially in Egypt where you got 90 million people are roughly live close together along the Nile, right? So if I can help to save lives by doing that, then that's right. Capitalism comes second. Yeah. In fact, in my MBA program, which I launched in 2019, all my students in 2020 in my program, so 1 year program on my website, the second COVID hit, I said, "You guys aren't paying me anymore. You get free education the rest of the year." So anyway, I really do believe that if you chase money, you lose your money and your dreams. But if you chase your dreams, you don't give a damn what people think of you. Something beautiful happens. Your dreams come true, and the money falls accidentally. It always does. And so the reason I started doing what I'm doing right now is, I introduced when I worked in venture capital, I introduced Tony Robbins to we introduced to one of my portfolio companies, and then he convinced me to just quit, walk away, and teach. And I've never been happier. And it was a total accident why this has become, a 8-figure business or whatever it is. humbly. I shouldn't have said that, sorry. But I'll show you what happened. Okay, so what I did was, let's see here, charity. I would teach on the weekends, and I was the chief academic officer at the Limo Foundation in East Palo Alto, where the high school graduation rate is only 40%. And what I would do is I would teach these kids that they all have a deadbeat fathers, right? A lot of them do, right? And my heart bleeds for them. And so what I did was here it is here. What I did was, I think it was January of, I was still working in VC. It was January of 2016. I created this course for them on a Saturday called An Entire MBA in One Day. And it was so awesome. And these kids are between 9 and, I think it was like 17 or 18 years old. Um, and they loved it. And I loved it. It was so much fun. And there were tears from all of us at the end. And that was on a Saturday. Then on the Sunday, the next day, what I did was I threw a camera up at my house. And I threw a camera up my house in my bedroom just to record um, the course and just to give it away. And my wife saw me with the camera in my bedroom. She said, "Honey, this is not happening." I said, "No, I'm recording a course." Oh my God, I wish I could rewind 7 seconds. Okay, fuck my life. Here we go. Just kidding. So I recorded the course and I threw it up on a platform called Udemy on the next day on the Sunday. And it started making about, I mean, initially it was February, made close to 6 figures a month, right? And so it wasn't about money. It was about sharing and helping people. And it's the whole notion of give and take. If you give, you'll receive. It's prophetic. It's been true since the beginning of time. And there's a great book called Give and Take. And the bottom line of that book by Adam Grant is this: the richest 1% of people in the world are givers. Okay. Billionaires. Yeah, there's a lot of selfish pricks that are billionaires that are avaricious, but a lot of them aren't. And a lot of them became incredibly rich and successful, and some of them happy because they give. They help people with their time, etc. And a lot of my humble successes in life have come because I've helped people. And I want you all to help people as well with your time, not just your money. I think your time is more important than your money, to be honest. Because when one teaches, two learn. I want you to mentor people younger than you, your cousin, little brother, little sister, your kids, obviously, people that work with you, people in different departments. Mentor them. Because you're basically reminding yourself subconsciously of what your DNA subfabric blueprint is for success. We're here to help others. And every single year, not to bore you with my life story, but every year when I worked at Goldman and other top finance companies, whatever, my annual review is always very difficult for my boss. It was difficult conversation because they'd say, "You're a top performer, you're earning a lot of money for the firm, everybody loves working with you, you're fun, but can you spend a little bit less time helping people in different departments?" I just couldn't. I just love it. So I want you all to mentor other people as well. Again, when one teaches to learn. Yeah. All right. Oh my God, I talk a lot. Okay. But I love what I do. All right. Yura wrote, "Hey Chris, greetings from Scotland. How are you? Great to see you. We had an au pair for 9 years. We had an au pair years ago. My kids were younger. Which you guys got to, if you guys have young kids at home, au pairs are great. We had one from Brazil, one from Canada, one from Scotland. And when she arrived from Scotland, my kids said to me, 'Oh my God, Dad, she sounds like Shrek.'" Shrek. So Mike Myers, he played Shrek. He's a wonderful Canadian and Scottish too. And I think I'm part Scottish as well. I got a little bit in me. Yeah, yeah. Okay. Thank you for joining. Okay. Alexandra wrote, "Just for fun, what would an angry version look like? Just acting of me?" Oh, I usually don't get angry. I get even. No. I don't get angry. Yeah, I'm pretty unemotional. Whenever something really bad happens to me in my life, business wise or whatever, I always say to myself, "What's positive about this? What's positive about the market crashing? Well, you can buy the stocks cheaper. What's positive about the company you work at making job cuts? Well, it's going to force you to work harder to start your own business on the side so that you don't wake up one day and realize that you work for a schmuck who's paying you this much money to make their dreams become a reality. Yeah. With crisis comes opportunity always. Yeah. Okay. I can't remember the last time I yelled. Yeah. Hmm. But I've never hit my kids. Yeah. Whatever. Yeah. Yeah. While they're awake. It was awful. That was awful dad humor. Not true. I don't hit them. Yeah. All right. Next question from Maxon is, and give me 1 second. Alexa, set an alarm at 9:59 a.m.
Sixth alarm set for 9:59 a.m.
Okay, great. Maxon wrote, back to your statement about Tesla in India. There was a rise, yeah, BYD cards, an Indian brand electric cars. Yeah, I expect Tata Motors to do exceptionally well in that market in the longer term, especially given the fact that there could be massive import taxes in India for BYD, Teslas, et cetera, in the long run to preserve Tata Motors. Yeah, which I think is a great company. Okay, Sean. Hey, Sean, how are you? Sean, what's going on? Sean and his wonderful wife, Michelle, who her parents named her after a Beatles song. They're both in my MBA program. Great to see you, brother. You wrote, my math nerd friend is doing well in the market and is wondering if you worked at a place like Jane Street, um, is it even worth it if they're doing well already? Were the quants you've encountered happy? Yeah. I'm going to be intellectually honest with you. A lot of people I've met in the hedge fund industry that are very successful are very unemotional. So you don't know if they're happy, but you also don't know if they're sad. And I've worked for billionaires also that, they don't, and I recommend, I hate to say this to everybody, but don't be too happy when things go well in business. Otherwise, you're going to freak out when things don't go well. But I'd say the most successful people I know, for the most part, are relatively unemotional, but they all have positive attitudes as well. So happiness is it's kind of hard for me to explain. But tell you what, Sean, because you're in my premium product today on our 3 hour and 20-minute Zoom call, give me more details on your buddy. Even have your buddy join if you want, and I'm happy to give more advice and do a deep due diligence together on Jane Street. Yeah, thanks. Always good to see you. Okay. All right. You're wrote, what is your take on investing in classic energy and grid companies like Siemens and GE? Yeah. So Siemens, for those not familiar, it's like General Electric, but in Germany. Um, I wasn't a big fan because they're kind of conglomerates. I like investing in pure plays. Conglomerates were all the rage in the late 80s or early 90s or so. Jack Welch did a great job with GE, and then Jeffrey Immelt kind of ran into the ground, especially with GE Finance. But I'd have to do a deep dive on them. But I like investing in pure plays, companies that are good at one or two things only. Yeah. All right. Give me 1 second here. And GE almost went bankrupt in the fall of 2008. That's me buying time while I find where the hell I was here. Here we go. Okay, good. All right. Next up. But when it comes to energy companies in general, they're kind of rentals, dude. Like the way I look at it is, like I'm so long term focused. Like I always ask myself, in 5 years or 10 years, will this company be more relevant than it is today? So when it comes to energy companies, I'm a little bit less optimistic about them in the very long run. Yeah, yeah. Okay. Next question is: a lot of American companies are making crypto treasury left and right. Is it an investment or a new bubble in making too much optimism or genuine hype? Yeah, I think it's fiscally irresponsible for non-crypto companies to own cryptos. And I know that I'm going against, micro tragedy and Sailor here, but on your balance sheet, you're supposed to own cash and short-term investments. Short-term investments are supposed to be very low risk investments for working capital purposes. Yeah. Okay. Yura wrote, you got to track Buffett's health and well-being and short Berkshire in case of some sad news. Yeah, I feel I love the guy. I really do. And he taught one of my classes. He came in and guest lectured at some point. Thank you for tracking that. I love you. But you got to I love him. So when he came and taught my class at Columbia, he graduated from Columbia as well. Um, you know, he talked about, you know, the importance of presentation skills as well. And whenever you watch an interview with Warren Buffett, you don't walk away thinking, "Oh my God, I'm so confused." His genius is not just his investing acumen, but equally as important is his communication skills. If you can learn to communicate complex topics in a simplistic way, you can become a billionaire. And you can always use ChatGPT to help you with this. You know, you can say, I don't know, explain derivatives to a 10-year-old in less than 3 sentences. And with my column in Forbes magazine and, you know, all the articles, books I've written over the years, my editors have always told me, Chris, stop trying to write like you're writing for The Economist, because the total addressable market is that. Write like you're writing for USA Today or like an 8th or 10th grade level. That's how you got to do it. And I recommend all of you take the Dale Carnegie public speaking course if you can, in person. Okay, it's life changing. Buffett took it when he was 19, and I took it when I was 19. And my son Matthew is going to take it in a couple of weeks, and he's 19. It will do a lot for you. Yeah, and of course, I teach you public speaking, all that stuff as well. In all my programs, you can learn more at this website thing here if you want. Yeah. In fact, Warren Buffett on his wall in his office, he doesn't have his Columbia MBA or master's degree. He's got a certificate of completion from the Dale Carnegie public speaking course. Yeah, and I want you all also to go to rather than spending money on my stuff, but instead, you know, spend it on going to UPW, Unleash the Power Within. That's Tony Robbins' program. You have to do it in person. It's life changing. I promise you. He's a good guy too. He's a real person. Love him. Yeah. Even when I've met with him, his hand wrapped around mine like 8 million times. But he's a good dude. All right. Next up, Annie, the ninja dude. How are you? Wrote, hey, Chris, I've been enjoying your videos. Thank you. I bought your course. It's very valuable. Thank you. I've been slowly growing my financial knowledge as a student currently studying economics and finance. What do you think about Bell? Okay, so I'm assuming you're based in Canada. You're talking about a Bell Canada, kind of a regulated monopoly. I don't have thoughts on it right now. Yeah, but I would think it's more of a value stock with a decent dividend yield. Yeah. But if you want, you could set up a call with somebody on my team. Just go to this link here to talk about what we do if you want to take our programs. And if you sign up for my program as well, you get daily access to me. I love doing this. Okay, daily access, at least 1 hour every day of group Zoom calls and 10 hours of one-on-ones and all that stuff too. The way you know you've got the right job is when you're on vacation like I am right now, and you still love doing what you're doing. Yeah. And I will help you all find your passion as well. All right, next up, Manas wrote, and I'm looking forward to chatting with you over Zoom in about 15 minutes, brother. Wrote, what do you think the future of program coding? Does it matter anymore? Will coding be as ancient as hand loom? Or will it evolve? Is it WordPress moment where anyone can make a website and without code? Yeah, yeah. So Jensen Huang, who we all know is the brilliant founder and CEO of Nvidia, he said the worst thing you can do in school is study computer science. And the reason is because AI was created to do that. And so the jobs that are most at risk are programming jobs. Don't study computer science anymore. Yeah. All right. Next up, Aizen wrote, first of all, Anonymous wrote, I want to be a finance pro. Awesome. Set up a meeting with my team if you want. Yeah. Aizen wrote, your take on coming to the United States for a master's, 21, being a computer science student. Should I choose computer science for master's or an MBA in finance in the US? Yeah. Oh, it's tough. I probably lean towards an MBA, but I think it's a waste of money, which is why I created my MBA program on my website for a fraction of the cost, to be honest. I'm not just trying to sell something. I really do believe that MBAs are a dime a dozen. Yeah, it's tough. But if I had to choose one, computer master's in comp sci or an MBA in finance, probably the MBA. Yeah, you get more value out of that, I think. Yeah, yeah, yeah. And then when you come to the States, and you'll be in a similar position to me, you'll be on a school TN visa and then H-1B visa as well. You got to network aggressively to get a job at a large company because they've got lots of lawyers and they can take care of your H-1B and eventually green card longer term if you want. Now, this message goes out to everybody on this webcast. Whenever you see a job opening online, you literally have a 1 in 250 chance of getting the job. Now, the person that gets hired knows somebody at the company. You have to network with people at the company. How? Step 1, make a kick-ass LinkedIn profile. Step 2, write an article every week on your LinkedIn profile about what you're passionate about, what you want to sell yourself in what market. That gives you social proof. Step 3, set up tons of informational meetings and help people in those meetings. And I teach all that stuff in my program. You can see the link and set up a meeting with us if you care. Yeah. Yeah. And then Yura wrote, BYD is sneaking into the UK. It's unbelievable. Yeah. And I've seen executives from the company the past couple of days give presentations saying, we're not focused on the US market because they know that Trump is gonna Heisman it. He won't allow it, right? But it's gonna get to the point where, fuck, I mean, these $10,000 cars, even with 100% tariff, might be worth still buying. And if that happens, I'm sure Trump is gonna make it 500% tariffs, et cetera. It's unbelievable what BYD has done. Robots build all these freaking cars as well. They even make their own ships to transport 7,000 cars each, to places like Brazil where they're building a massive plane right now. Yeah, it's an amazing, amazing success story. I should probably create a case study on that and do a video on it. Yeah, I'll do that. Yeah, it'll be fun. Okay. Manas wrote, hockey is the national sport of India and invented in India. In fact, I did not know that. I know that lacrosse is Canada's national sport. Most people think it's hockey. It's not. Yeah. And I remember back in 92 and 93 when Canada, Toronto Blue Jays won the World Series. Only Americans would call a sport in two countries if you win it the World Series. Okay, now Americans are going to get pissed off, right? And I am American and Canadian, so I can say this. How does an American screw in a light bulb? He holds it up and the whole world spins around. There, I said it. Now I get unsubscribes and thumbs down. Come on, let's do it. Just kidding. Having fun with you guys. Yeah. All right. But in 92, 93, when the Toronto Blue Jays won the World Series, finally I was able to tease my American buddies. I said, hey, American pastime. Hey, Canadians won. And my American buddies who are so witty said to me, yeah, so what, Haroun? Your Americans beat our Americans. I was like, yeah, that's true. The thing about Canadians is we can laugh at ourselves. Yeah. Okay. The Oracle, oh my God, Kemi Tade, how are you? It has been ages. Kemi, I enjoyed meeting with you, your husband, and your beautiful children here at my house, my parents' apartment right here, exactly 1 year ago when you drove down from Ottawa. Thank you so much for that. And you're the only student of mine that's ever met my dad. My mom was taking a nap then, but God bless you. I miss you. I hope you're doing well. Yeah. So Kemi wrote, I'm sending your mom all my prayers. Thank you. God bless you. Yeah, thank you. Yeah, we're going to build that school in Nigeria in honor of your mother, who's so proud of you right now, watching down from heaven. We're going to name it after her, kind of like we did with the school in Kenya for Marin's mother, who's also up there hanging out with your mom, my little sister Katie. I miss you, Katie. Give Kemi's mom a big hug right now, and Marin's mom too. Okay, good. Yeah. And then he wrote, I've started the AI forensic accounting course. It's amazing. Thank you. AI and ML are the new gold rush. Yeah, it's awesome. Very cool. I missed you, Kemi. Kemi, why don't you do this? Why don't you join me? Use the same Zoom you always do. In 10 minutes, your Ottawa time. So it's 1 p.m. until 4:20 p.m. your time every single Thursday. Would love to catch up and have you meet with all the new folks in the program too. Yeah. Miss you guys. Okay. And thank you for teaching me and my kids and I, my mom would say, on how to eat an avocado the right way. Remember that last summer? Thank you. And thank you for visiting me last summer. I needed that. Thanks. And then iChronos wrote, I started watching Billions because of your shorts. They should sponsor you. LOL. Thank you. Yeah. Actually, the co-creator of Billions reached out to me and said, he loves what I'm doing. And a lot of people that worked on Billions, the stagehands, behind the scenes people, have sent me tons of messages saying, thank you, thank you. Now I understand what this episode meant. Yeah. I'm having fun doing that. Yeah. Okay. Okay. So Kemi wrote the AI course you did with Luca. Hope to catch up soon. Thank you. Yeah. No, Luca's great. He actually joined as my CTO. And so Luca, according to Google developers, is one of the top 100 AI machine learning experts on the planet. He's a good guy as well. He got married in Serbia. I went to his wedding. I think he was in your class a couple of years ago. Might have been, yeah. But I went to his wedding in Serbia a couple months ago. It was fun. 7 stars wrote, I am Egyptian too. Awesome. Welcome to the house of Habibi. And you wrote, I would like to learn from you. I bought your course a long time ago on Skillshare on public speaking. It was an amazing one and helped me get hired easily in my current job. Bless you. Thank you. I pull all my courses off of Skillshare. Yes, the economics aren't good there. God bless you. Set up a Zoom call with us if you're interested in joining our program by clicking that thing there, or go to that website thing there if you want. Yeah. Excellent. Egyptians have a good sense of humor as well. That's for sure. Okay. And then Magnanime wrote, if I max out a 401k match with your company, good for you. I want you to do that. Every penny that your company offers to give you, I want you to put in as much as you can in your 401k. That's free money. Okay. Always. Should I max out contribution to it or put the rest into a Roth IRA? Ooh, it depends. So for those of you not familiar with a 401k or a Roth IRA, 401k means you put money into a tax savings account. It grows tax free. And then you take the money out, you pay tax in the future. With a Roth IRA, it's a little bit different. You pay tax first, you put 6 grand in or however much you want to put in. It grows tax free, then you take the money out, you don't pay taxes. So if you think that your tax rate is going to be much higher in the future, then maybe put it into a Roth instead, if you can. And it all depends. Like Peter Thiel, for example, who was the first investor in Facebook, he put $500,000 into it. He was also invested in Palantir, et cetera, and was the co-founder of PayPal. What he did was in his Roth IRA, he put shares in Facebook and I think maybe Palantir into it at pennies on the dollar, like less than a penny even, into his Roth IRA, $6,000 one year. And that's worth close to $10 billion, probably more than $10 billion now because of PayPal, or pardon me, because of Palantir. Yeah. But what I want you to do is Magnanime, I want you to talk to your accountant too, please, as well. Yeah. Okay. Next up, Alexandra. It's my little sister's middle name, Elizabeth. Wrote, do you do meditation and yoga? Have you tried them? I used to do hot yoga with my wife, and it was cool because there's a lot of mirrors and a lot of hot women in there. But I didn't look at any of the hot women. So bad. I'm just kidding. And MBA does not stand for married but available. Okay, this never comes off. Okay, yeah. I've tried. I'm not that flexible, but I like it. But meditation for sure. The way I meditate is as follows. I say prayers. So before I get out of bed every day, including this morning, I always do this. I practice gratitude, and you can do it too. I thank God for 10 things in this order. Andrew, Matthew, Dylan, those my kids, my wife, Christine, my mom, my dad, my brother Jamie, my sister Katie, who's hanging out up there with Kemi's mom, my little sister Elizabeth, and all of you, my students. Thank you. And then I read a chapter of the Bible. Yeah, that's my form of meditation. Yeah. And then Yara wrote impressive production with the Excel course video. Thank you. Thank you. I appreciate that. And then Manas wrote, the Excel course is the best in the planet. Thank you. I had so much fun making it. I'm so sad when I finish a course too, man. Because I have so much fun making these damn things. It's kind of like when you read a book, like a hardcover book, you finish, you put it on your shelf, you're proud of yourself, right? But you're sad because part of you is in that book. And you younger kids never finished a book. You don't know what that feels like. I'm just kidding. All right. Anybody else I can upset in this webcast? Okay. And then Aporia wrote, good morning, Chris. Wishing well to you and yours. Thank you. And then Maxon wrote, that ad was top tier, great acting, absolute cinema. Thank you. And making that video, it was ridiculous, hard, man. Like I got new respect for actors. I thought they were just idiots that just memorize a couple lines. It's hard, man. Like I had a director, producer, tons of cameramen, as well as extras everywhere, and the director was saying, "Be happier, look more surprised." And and every time I screwed up a take, and it was boiling hot that day in Bakersfield, California. Every time I screwed up a take, all the waiters, I mean actors, extras, sorry, they were like, "Oh my God, here we go again." Yeah, it was hard. Okay, now I pissed off actors. Okay. Manalis wrote, "Much love to your mom, family. Thank you. She's gonna be good." Yeah. All right, next up, Carter wrote, "Hey Chris, how are you? It's been a while. How are you? Great to see you." You wrote, "You're a really great mentor. Thank you. What do you think to invest in the company Gigastar? Investing in the creator economy? Please have a look. It'll be helpful. Thank you." Yeah. So I don't give investing advice on individual companies. Rather than giving you a fish, I teach you how to fish. You can eat for a lifetime. You can always use that template I showed you at the beginning of today's webcast. Yeah. Thank you. Okay. Manas wrote, "The CEO of Alibaba Cloud said 90% of AI companies will be gone in 10 years' time. According to your prediction, who will stay and why? What will they have to offer?" Yeah, yeah, I agree with that, right? So it's a bubble right now. It's kind of like 90% of crypto companies won't exist either. I believe that too, right? If you look back at previous bubbles, like in the late 1990s, we had a dot-com bubble. There's a lot of companies with crappy business models like Pets.com, which sold pet food stuff online. They're gone as well. But it's human nature. Whenever you have a bubble, all ships rise initially, and then most of them say bye-bye. In terms of what companies to focus on investing in, I'll show you. My dad always told me only take advice from successful people. So I'm going to show you this here. So we're going to go to the best venture capital firm on the planet, sequoiacap.com, AI. Give me 1 second. So Sequoia had, here it is here. And I'll put this link in the chat in a second as well. So Sequoia, which is the best venture capital company on the planet, they led the Series A in a company called Cohesity. My previous fund, we led Series B. I was on the board as well. Love this company. I'm going to show you what companies you can do research on. Okay. And again, I'm going to provide this link in the chat in a second. Okay. But these are the AI companies that they think are the market leaders. Okay, now not all of these are pure plays, obviously. TikTok's not a pure play. These are consumer ones. Here's enterprise, if you guys are techies. So for example, Glean, it's kind of like Google, but it's like your localized AI search engine on your corporate intranet, so to speak. Sales, automation, vertical, and for those of you that are into prosumer stuff, we have it here. And then down here, if you're super techie, these are all the tech tools you can use as well. Okay, or look to do research on. So what I'm gonna do is I'm gonna copy this and I will paste this in the chat, and you guys can click on that and leave this webcast, which hurts my engagement, but I don't care. Okay. All right, I am going to have to rack up this call, guys. I apologize, but I'll see all you guys in my other premium products for a 3 hour and 20 minute Zoom webcast. You guys know where to get that link from. God bless you all. I'll be back in the Bay Area next week, but I'm going to end this webcast like I always do with a life-changing video, okay, that I license. It's a Steve Jobs interview from the Silicon Valley Historical Association. God bless you all, and thank you.
So the thing I would say is, when you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it. That's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it. versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.